And so from a volatility point of view, because one of the things that I've looked at when I've looked back across at the markets, we've seen an intense amount of
Yep.
volatility over the last 10 years,
Yep.
say. But then when you actually look back to, say, from back to 2014 and then 14 back to 2004,
Yep.
when you actually go look at the charts, we've had exactly the same amount of volatility. You know, there's been there was COVID, then there was, there was GFC, then there was the tech wreck back in 2000, then there was a bond market correction in
Yep.
1994. Like, there's always been volatility. Are we expecting going forward more volatility or less? Like, what's the sense around that?
Another good question there. I think in terms of volatility, we experience episodes of volatility. So as you said, we've had that period, and I think in early August we saw a little bit of that again. There was a little bit of volatility in the equity market and the Japanese around the Japan carry trade as well, and that's a period. When we're building portfolios, we're thinking about those periods of volatility and what is going to work for you during those periods of volatility. So what we saw in early August and what we build our portfolios around is that bond markets, which don't make the 7 o'clock news, like Alan Kohler doesn't really talk about them all that much on those periods on the news, but it's actually a bigger market than the equity market, and so government bonds tend to benefit from a flight to quality when you have those periods of volatility in the equity market. So when you have risk assets, which is in my mind equities, drawing down, then oftentimes, and not always, because we didn't see this in 21 and 22, but oftentimes you will have something like the bonds offsetting that. So it really helps to, I guess, smooth the ride. And I think we were discussing earlier that sort of it helps you stay the course over that investment journey because you're having less steeper climbs and deeper dives. They're sort of muted a little bit more by including bonds in the portfolio. So that's, I guess, something when we think about volatility and you look at the VIX index, which is a measure of volatility that people often look at. Certainly we've had bouts of volatility and almost, I think we went through quite a sustained period when there was pretty low volatility. And that almost worries me more than periods when you do
The
have high
calm before the
volatility,
storm.
because it's like something's going to happen, but you don't know what it is. Yeah. We didn't predict COVID was going to happen, and we didn't predict the volatility. So you just know that it's not going to last. That you're not going to have those periods of no volatility.